Greetings, Jedi traders. David here of TradingFibs.com to bring you the technical momentum outlook for week 23. It is June 4th, 2017. As always, please seek financial advisement when trading with your money, as these videos are for educational purposes only, to support your knowledge in the market. See what's going through my head on any given day. Always make sure you have a solid trading plan, and always manage your stop when placing a trade. All right, Jedi traders, let's get started here with our technical momentum outlook. Also, make sure you catching up on last week's bits here through the weekly recap. Again, just a trend of the day chart. The T3 moving average setups, looking for those highest probability setups. Price action either above or below the Heiken Ashi, the 5144 cloud, HA bars and trend, and as many other charts in sync. I don't watch too many. I watch the 534 and the 5144, and that's your intraday setup. But on the technical momentum outlook for the week, we take a step back and we take a look at the big picture. Where are we currently standing technical momentum wise, knowing that anything can happen during the market, during the week, that can flip it on a coin. All right, horrible news out of London this weekend. We'll see how that plays itself out in the market, but our thoughts are with those who perished and for all those affected. All right, let's get right into, actually, let's just quickly take a look at last week weekly recap, as we've seen this market just relentless uptrend, no question about it. There's the post-election from November, as we've been just in this bull rally. What did I see the other day? Most hated bull rally. Well, you might hate it, but the rally's upside, and ticks are upside, and portfolios are upside. So markets have been rolling up, and we got our second, after at least a couple months of consolidation through the summertime, that's right, approaching us, as we can see price action get a nice little lift here. Through Q1, a little bit of consolidation, and getting our second little bit of momentum here on the ES as it works its way from the MML lows to the MML highs. We'll have to see, interesting enough, what the ES does up here at the Murray math level highs. All right, so the ES holding not only on the MMLs, but taking a look at the range chart, daily picture, throwing in our staple moving averages, the 10 EMA. I use the 10 EMA for the lower time for the intraday. So we can see short-term momentum upside here at the tops, holding above the 10-period moving average, definitely holding above the 50, as well as well above institutional support here at the 200 moving average. Now, what I wanted to show this week, and actually based on the intraday setups of using the T3, that's the Tim Tilson moving average, I actually threw in a T350 and a T3 200. As you can see, it's a little bit more smoothed out. It doesn't take the quick price action curve as some of the other moving averages. More of a smooth moving average. And you can see actually price action as it broke down underneath the 50 here to the T350, interesting enough. So we'll be watching that. Some of you just started this week, but again, all you got to do is count up every single moving average, and the ES is still holding up above that 10-period moving average. As long as we're holding above that, short-term support up there, always watching for the 50 first level of support to break. Shading here in between the 50 and the 200, so still showing upside momentum. Definitely an all-time highs this week. Several there on the NQ. You can see the dashed lines. These are NQs making new all-time highs through the week and laying out an open gap as well. So nice move all around on all three indices as the relentless momentum pushed them up. So taking a look at the ES trend overall for the smaller pick here on a 15-tick range chart. I use the HA bars. Again, these are trend candles showing last week's week 22 momentum as price action at the beginning of the week finding support off the T40. Actually, this is a Tim Tilson, the T3 moving average set to a 40. All right, 40 EMA, finding that support there, and price action lifting above the cloud. Either way, it's the HA bar showing 10. So ES, nice move after a little bit of support there. And the NQ again, nice picture here as we use the T34 as well as a T100. Nice move here. We've seen that as well on the ES. Find the support. Price action downside here towards the latter part of the week. Here's the beginning part of the week. Price action came underneath the cloud. We saw that move down at the beginning of the week, found that support, and then upside. Last day of the month, first day of the month, and the second day of the month, all around. Jedi Traders, last week on the daily trend, I forgot to show 3 charts in the recap. I want to go ahead and post those here again just to show you that it wasn't just the indices that were rolling up. And again, that sometimes is a little concern to me that when all 3 indices are rolling up, that gold and yen and euro are also popping up. Usually doesn't last like that. One of them tends to turn around. All right, so nice trend on the GC. On Friday, also here, the T3 moving averages crossing over. First, one of the indicators to show momentum. Price action above the cloud here. A little bit slow to go, but that again is Globex picture. And then once gold opened up, nice move to the upside, holding above the 5144 cloud, even holding above the VWAP as well. All right, taking a look at the yen here. Same picture here. Price action through the non-farm payrolls actually reacted more to the market news there than the 3 indices. But again, nice move. Price action sitting above the 5144 all the way throughout the remainder of the session. Now, 6E, if you were lucky enough to be pre-market, there it is. Look at that shaded area. That was all within 1 second of price action. So I don't think too many of us crumb traders were able to grab onto that. But again, 6E, find a little bit of pocket right afterwards and then just chopping throughout the remainder of the day. But I want to go ahead and point that chart out that even though sometimes trend look great, you got to look at the candles and the time frame that they all hit. And that was almost impossible by the average Joe Crumb trader like myself. All right, let's jump in to the charts here. All right, so moving into technical momentum outlook for the week. Price action here sitting at all-time highs on the NQ. That's the first thing we know. That's the obvious. 2, where are the open gaps down below? Anytime price action is about to turn down, we want to know where our first open gaps are. And so 58.23 NQ gap from Thursday, Friday action. That would be the first open gap I would want to see closed if any momentum shifts downside. 57.34.50 would be our next level down. YM again here, 20. That was actually, I apologize, that is not an open gap anymore. That was actually closed. So we'll go ahead and close that out. So let's erase that. And I believe these were all, actually, these were, there we go. Those were all-time highs. There we go. So no open gaps actually. And the next one down is actually 23.15.75. Now, sure, we got a collection here. This would be my nearest short-term. While I have open gaps well below that, this would be the zone of open gaps downside, 23.15 down to 22.79 in and when that event occurs in the market. And it will, 100%, it will, guaranteed. I'm not saying next week. I'm saying eventually. But keep that in mind. YM, we got 248, 22.48. So that would be a huge drive down as well. But markets tend and will correct themselves, and open gaps will be in play. All right, let's jump into the big picture. I enjoy watching the markets on a bigger time frame on the MML levels, especially as they drive from the lower levels to the upper. I'm not saying this is something that I enter at the lows and hold on to the upside, but it's nice intraday when you know momentum is driving upwards, holding above the 10 EMA. So going into week 23, again, my 60-minute charts will always be the first charts to reset themselves, but keep it in mind that there's upper levels as well on the daily and the weekly. So looking upside on the ES, first level of resistance up here will be all the way up to 24.53. If we're able to break above, especially 45.25, I'll start looking for a reset on the 60 and then start looking up to not only the weekly but the daily levels up here, 24.68 up to 24.84. Any pullback in the market will start to look down to 50%. That will be 24.22, and then watch for support at the 10. Anything lower, any price action that breaks this level of support, we'll want to watch the zone low here, including the open gap, which does definitely sit down at 23.15. But again, that open gap is already below the 50, so that would be the next major level of support. But currently, momentum still sitting to the upside on the higher time frame, 15 tick. So we'll be watching that T340 for support as well, which puts us at 24.18. And look at that, it matches almost up to that 10-period moving average. So again, you got dual support there on both charts. Remember, every day intraday, we're looking at the lower time frame on an intraday, and we're looking to, that's right, pull it up next to the high time frame, splicing into, let me open up this a little bit more, we're splicing into the higher time frame, and so tending to want to sit out of the PM session. You can see price action breaks above the cloud, moving average crossover. You want as many charts in sync, so yeah, the higher probability setup already down the road, but as soon as you get the move up, Heikin-Ashi bars on the bigger time frame, there you go. There's your high probability setup. All right, taking a look at the levels on the NQ as we sit at the zone high. Any pullback will be looking to 58.20.25 down to the 10 EMA. Zone low down here all the way down to 57.52. Keep in mind that daily gap there at 58.23. All right, bigger picture definitely holds up. Support here at the T3 100 and T34. Nice move upside. Price action holding above the cloud. And anything higher, well, we got to go to the weeklies at this point. Definitely, as price action continues to go into uncharted territory, Fibonacci's daily pivots, resistance, support, as well as MML levels can be levels that we foresee to the upside, and any other study that forecasts or projects any levels. Watch the 60-minute reset. Price action held to the MML lows this week, broke to the highs on the momentum, so nice move. We definitely have open gaps to the downside, so keep those in mind. But again, watch for the MML reset if we continue momentum throughout the week, or any pullback. We'll first watch the T34, which holds here at 58.30, which just puts us above the halfway point, 60-minute. Again, you want to make sure you check weekly, intraday, or daily posts for those new levels if they come up. Momentum on the third index also continues to be on the upside. Price action holding above the T34 as we hold in the zone high. Any pullback will be looking to 21.094 as well as the 10 EMA, which is just, as we see here, the T34 climbing upwards. The YM, which has been dragging somewhat, which would put us just above the range of the 50% pullback. Anything to the downside, this would be the zone that we'd be looking at for first levels of support. Anything lower than that, we'll start looking down the zone low, down to 29.38. Upside, first level, 328 on the YM. All right, jumping into some of the other markets that we watch intraday. Take a look at the crude. Crude still holding downside underneath. Yes, count them. 10, 50, 200 as the zone high. Yep. Zone high reject there this last week, and price action drives itself down, finds support off the MML low. So sitting down here at the MML, again, momentum is definitely downside on the range chart. We can see here all three charts in the red holding underneath the T34, as the T34 is the resistance to the upside. Price action again, momentum, we'll want to see if price actions to drive down lower in the zone, or if any pullback occurs. Watch the 50% here, 48.44. Watch the T34, and then back upside to the 10 and the 50. Taking a look at the GC, price action on the gold, moving back up on Friday, zone high. There we are, price action to the upside, all the way up to 12.81.3. You'll be wanting to watch anything higher. We'll be looking up to 89.10 as the momentum on the gold really has been just shuffling back and forth. Again, I can go to a higher time frame, but even a 50-tick chart has been showing price action for the most of May to the upside, finding a little bit of support there on the T34. Price action pullback at this point on the NQ. GC, we'll want to be looking down halfway, all the way down to the 10 EMA, or around here, 12.65, and then there's your zone low for any pullback any deeper. And our last two, taking a look at the yen, same picture. Yen gets a lift, boost up, trying to devaluate that dollar. Price action on the yen moves up, zone high, kind of waffling also on the yen as well. So we're pretty much going from MML high to MML low, or 50% at least. Price action, no, momentum-wise, Still holding above the 10. Like to see that 10 get above the 50 to truly show momentum to the upside, but price action once again holding above those key moving averages, but really in a consolidated zone on the end. So upside, I'd be looking up to 91.01, and back downside, there's your 50%, 23.5, and then back down into the zone low where you have a combination of those long-term moving averages. Got to break away from that. 6E, nice momentum drive up here. Some pockets of trend as the price action on the 6E for the most part upside this last week on the higher time frame 20-tick range chart. Again, that was Friday's price reaction to the non-farm payrolls. Holding above the cloud as we go into the Sunday open. Price action again, zone high up to $113, 525. Anything higher, there's your levels that you want to watch. On the higher time frames, they don't move as much. 60-minute tends to be the reset for at least the intraday, and then splicing in on the lower time frame on a 10-tick range chart. Pull back, I'll be looking to the mid-range here to around the 10-period moving average. Go ahead, slide that arrow over as we found support there last week. And anything lower zone, there's the numbers you'll be wanting to watch for on the 6E. All right, Jedi traders. I did not. Let's get the economy here picture up for the week as we roll into week 23 here. Price action again. We'll be wanting to watch jolts this week. Not a red star event, but at least some numbers out there, and crude report on Wednesday, as well as we have Comey testimony out this week. I believe that's on the 8th, as well as the UK vote with the tragedy there. I don't know if it's going to be taking place, but jobless came out this week as well. So again, you can check out, there it is. June contract expiration also coming up, nearing quad witching on the 16th. And as we roll forward through the week, it will be next week that contracts will start to roll over on the trading platforms. All right, bottom line as we roll into week 23, I like to summarize it all. Again, you could capture all this information here on my Technical Momentum Outlook. As we take a look here, indices holding at all-time highs. We know that. It's pretty clear. We'll want to be watching the downside support as trend will look to both those halfway points, 60 minutes MML zone lows, and that 10-period exponential moving average on the indices. All right, anything lower, look to the higher time frame range on the T3 moving averages, the charts that we saw on the right-hand side. Deep pullbacks will look for those 50-period moving averages. So consolidation at the highs before any breakout. We'll obviously see a 60-minute reset, so that will give us some shorter term before we get up to those weekly and those daily levels. Again, no crystal ball here, guys. Got to go with the intraday picture. Most people want to just be told where we're heading next week. The truth is nobody knows. Flip a coin. Half will get it right. Half will get it wrong. Some of us will be on the right side. Some of us will be on the wrong side. That's the market. So it's a hedge. It's a guess. At this point, your best bet is just continue to watch the trend intraday. A lot of dips, buys on the pullbacks. And again, look for the highest probability setup. And again, that's that chart I show you every day. That's all you got to wait for. Hopefully one of those will be the drive. I can't guarantee that every single setup will be the drive, as the NQ last week was a great example of a couple early morning and possible setups that it only took maybe 3 or 4 tries before it actually ran away. All right, Jedi traders, that concludes an insight into the Technical Momentum Outlook for week 23. Feel free, make sure we covered everything. Feel free to stop by at tradingfibs.com or any of my social media outlets to obtain more information. I showed you the chart. I keep it simple, one simple strategy. Any market, any chart, any time frame will keep you disciplined. You can find me every day on Twitter at tradingfibs. You can also follow me on StockTwits for those changes in the charts and the market. Make sure you check out my daily, that's right, that pre-market trend where I go ahead and post some of those MML resets from overnight, and then the trading session recap where I take a quick look at about a 15-minute video to show you the daily trend and where those pockets of opportunity were each day. Hey guys, I told you I leave the crystal ball to the experts. I only watch what's in front of me and on my charts, and I leave that bias at the door when trading. I don't have a belief that the market's supposed to be up. I don't have a belief that it's supposed to be down. perma bears all around. I write about it every week. And if you get into that mindset, that's where markets will take you. I'm a huge believer in that trading psychology. A lot of my information can be found here at my website. You can check out my trading rules page. Actually, if you scroll all the way down, taking a look at some of the charts, here it is, T3 basic template for TOS, which I'm working on updating. But the Sierra charts, you just click here. We'll be taken to that share drive where you can download it. I'm not giving it all away, but I like to share as much information as possible. Again, as covered last week, which I'll talk about here in a moment, but strategy is not the holy grail. Everybody's always searching for that holy grail strategy that's going to give them the highest amount of ticks. The truth is it comes down to trading psychology, and that's why I do the trading room. I think you'll find a reasonable trading room here. Again, more information is here about the membership in our trading, which I find reasonable. You read it for yourself and you be the judge. But if you're interested in joining us in our community of like-minded traders, feel free to email me, david@tradingfibs.com, and you can join us any Thursday or Friday to view the live chart setups as they happen in the trading room. Also, coming up with Infinity Futures, you want to check out the live trading challenge. As a certified coach now with Infinity Futures, very nice honor there. Hey, check it out. Opportunity on June 14th to June 20th to participate in a simulated challenge with a cash reward, commission credit, especially if you're obviously with Sierra Charts with Infinity Futures. You want to check out the live Train Challenge Intensive Camp coming up on June 5th through June 8th with Jim Cagnina. Following up after my webinar, which just took place last week. If you want if you want to watch those videos, check out their Infinity Futures YouTube channel. Scroll all the way down to the bottom, and there it is, archive webinars, part 1, part 2, and part 3. So imparting some key information I think some will help you Jedi traders in the long term. All right, that wraps it up. I hope I've covered everything for the weekly. If not, you know what I'll do. I'll post it out there. Just stay tuned for the week. Have yourselves a Blue Zone day in the remainder of the weekend, wherever you may be. And for all of you, have a great day. Have a great night and a good week to you. David from Trading Fibs, wishing you all a good week.